Picking up where we left off in my previous video on XMR, I discussed the high time frame context, and I mentioned that I was also in a trade from this supply mitigation. There wasn't really any great entry on this push up other than this redistribution here, which was even that was slightly sketchy. You created a lot of liquidity before finally popping down, creating this supply, and really solidifying the fact that you were in this high time frame model 1 distribution. So when price then curled back up, and then on this retracement leg, I will zoom into it in a second, had nothing but liquidity. You front ran this low, so you created a naked low right here, nothing significant at this low, front running this low right here, just tapping into some demand here, mitigating some demand, which was nice because now that demand is out of the way, and then curling up super nicely here with just straight liquidity. I entered on this retest right here with the wide stop loss, just to have some exposure to the downside, because there wasn't too many good short opportunities within this third tap. There was one decent one on SUI, which I'll just show real quick just for educational sake. So on SUI here, I didn't take this. I unfortunately did not take this because it was a banger, but we had this model 1. The overall model itself was a bit sharper, had a decent return to zone overall, but as you can see, it's a bit sharper, not the cleanest. But within this third tap, you had your own local model that can give you the confidence to short, because you already have a local model that can be de-risked at the technical target. That's in a really good location for downside. So here we go. And yeah, within this model, you got a nice break of structure right here. There's like a 2 RR to the technical target, and like a 15, like a 19 or something RR down to the technical target of the high time frame model, so you can just de-risk it at that local thing, and then just boom, which ended up even had a little redistribution here that in my opinion was not high quality enough to take a position on due to the low RR and the demand in the return to zone there. But that's beside the point, because there was no trades taken by me on that pair. Just more for educational and explanatory purposes. So we covered XMR, and then there was one more trade that I took on that pivot. So I'm kind of just making these videos. I'm uploading 4 videos right now, just some recent trades I've taken, and I just decided to split them up between like the different pivots of the, well, this is not the trade I took on BCH. I'm too zoomed out. But you did have a clean, beautiful model 2 distribution here on BCH with a bit more of a narrow tap, but amazing return to zone on the high time frame models. Sometimes those high time frame models have those more narrow taps. Boom. I'm getting ahead of myself, just rushing through this video, honestly. So I should slow down and go over the high time frame context just to make that clear. So yeah, BCH pumped out of the bear market lows, entered this massive consolidation here where not a whole lot happened. You swept this swing point, distributed, and aggressively pumped down to that technical target of that distribution. Since coming to the technical target of that distribution, Bitcoin's been in a bear market, and we got a pop up on BCH. We got a break of structure here, so level 1 and level 2 breaks. So your market structure is in the favor for downside, and you have this liquidity target down here that we can target on any bounces, because we front ran that target right there. So you can see that naked low, you front ran the liquidity target after getting the bearish break. Creates a nice environment for a short. Then you got some decent exhaustion coming into this model right here, where on the higher time frame you can actually validate this model as a model 1 disregarding this tap because that tap disappears on the higher time frame. So I was looking at it as a model 1 here, and what happened was you had this model 1. Technicals on this guy are a bit nicer to explain just because it's not your typical model like these other guys where it requires a very minimal explanation on my end. But yeah, so showing you how that tap can be disregarded due to the higher time frame structure. So the fact that we came up and saw the high again doesn't make it a 4 tap. It's still just a 3 tap on the higher time frame. Then we created demand here, created a demand zone, but that demand zone was created on the pop out of a compression. Looking something like this. Okay. Popped out of the compression so we can validate the demand zone as manipulation, also having it happen directly on that London open, pop up the entire London session, pushing price up, and then you're deviating the compression. Usually when you get a pop out of a compression, first move is the fake move, and you also, another thing to note, you usually don't come back for that high. So if you have a compression, you get the pop up and it's super clean, especially if you have exhaustion going into it, usually you're not going to come back and take out that high, and a lot of times you're not even going to come back for a proper model 2. And that did happen here. It wasn't proper, so kind of didn't happen because you put in equal highs with this liquidity point right here, which you could also consider a Wyckoff tap or a test. Just due to the fact that you put in that model 1, and then you got the structure trending up into the extremes, deviating that previous tap and breaking structure to bearish right here. And shorted on the break. I think I shorted somewhere in that consolidation, targeting that high, or with the stop loss with a high, targeting the low right here for a 5.57 RR. Took this one on half risk due to just a sketchier overall tap where price may want to come into the demand prior to sweeping the high again, which didn't end up happening. I also didn't expect it to happen due to that, but it was still just some extra risk involved. Also with Bitcoin potentially having room for higher, other reasons why you might want to come and take that high out. Just not the high quality confirmation that you would enter with a 1% risk on, but still nice high time frame model and worth the exposure there. Then there was another high probability entry, super clean refined entry that I might as well go over that I missed due to myself being asleep Saturday at kind of confirmed. Depends when you would have entered it. This one confirmed right here at 7 a.m. on Sunday morning. So not optimal for me. Usually I'm up at like 6 a.m. on weekdays, but 7 a.m. on a Sunday. I actually did wake up at 6 a.m. to check this chart, but I was just so out of it that I looked at it and then went right back to sleep and thinking nothing happened, which, in theory, or at the same time, the best entry had passed us up because you had this TCT and TCT right here, front running that liquidity point, increasing the overall risk of the model, but still valid to take on that retest. Because if you enter down here, what the hell, greatly diminishes the RR. That's a 1.6, so you would have to enter on this retest for a 2.8. De-risk the technical target and let it run down to here for around a 24 RR. So that's a pretty banger trade. Bit of risk there due to the front run of this liquidity. So maybe you would take that one on lower risk, or you just risk it. Or you, honestly, what you could have even done is just kept the stop loss here. That doesn't give you the opportunity to de-risk, but it's still valid to do so due to the the liquidity buildup on this retracement and the Wyckoff tap we have here. So a couple different ways you could have played that. Third being this 45-minute break of structure. Well, you had this break of structure, so you could have just entered on this break of structure with stop loss about that main high, like this. for 7.9. And then once you break this 45-minute structure, I would say it's valid to have your stop loss there, just due to the fact that once you're all the way down here, breaking that aggressively with the TCT and TCT, you're probably not going to exceed that high again. And you can kind of look at it as getting a front run due to it being the test. But yeah, that's all I got for this BCH trade. If you have any questions, let me know down below. Appreciate you for watching.